Hello, it's Peter Stimson from MPowered. We're now about 26 hours since the budget, so we thought we'd give you an update on where the markets have landed, why they've landed where they have, and hopefully a bit of good news at the end, or hopefully some good news. So as we're sitting here, 2-year swap is sitting around, or SONIA swap is sitting around 434. That's up around 32 basis points from midday yesterday. 5-year is sitting around a similar level. So that's quite a considerable jump. That's on the back of obviously the swap creeping up over the last 6 weeks, on the back of the anticipation that the Chancellor was going to raise, quite a significant amount of money. There's 3 sort of principal reasons why that is, and you kind of have to look into the OBR report as to why that's happened. Firstly, obviously the Chancellor's raised around 70 billion of additional revenue. Around half of that was obviously through taxation. The other half of that was through borrowing. And a lot of that borrowing is going to be done in the front half of Parliament rather than towards the back end. So that's obviously going to the markets, obviously raising a lot of additional borrowing through gilts. And obviously the gilt market and the swap markets are intrinsically linked. So that's obviously putting pressure on the cost of swaps because of that. If you go through the OBR report, the other factor is as well that the money that's being pumped into the economy through sort of various projects is obviously going to boost GDP. Reading the OBR report, GDP is expected to get a boost by around about 0.6%. Obviously, that's good for the economy, but obviously that means there's less pressure on the Bank of England to obviously reduce rates because obviously the economy is going to be doing better as a result. That means, the requirement to sort of drop bank base rate is obviously going to be less. And it's expected we're going to have a softer landing rather than a harder landing because of that. Final factor is obviously around inflation, pushing more money into the economy, raising the basic rate or the minimum wage essentially means there's inflationary pressures coming back into the economy. OBR is predicting that 25-26, the budget policies push CPI up by around 0.4. It's around by about 0.3 in 26-27 and around 1% in 29-30. So again, there's pushing inflationary pressures in there, which obviously means interest rates potentially have to stay a little bit higher for a little bit longer. What that means, well, potentially it means the curve which we were looking at, which potentially meant that bank base rate was going to hit, well, the market was thinking was going to hit around about 3.5 this time next year. Analysts are now thinking maybe that drops to around about 4% this time next year. So, the back of that swap curves are getting repriced. And that means that, like I say, whereas you were looking at, maybe 3.6% as a swap curve on the 5-year, maybe a few weeks ago, it's now being priced north of 4. The caveat to all that, and potentially the good news, is the OBR, if you read the report, has said, obviously, a lot of the estimates are subject to, lots of potentials, or maybe this happens, maybe that happens. So, lots can happen. And again, the markets tend to be quite a lot wrong as much as they are right. So, whereas, you can see how much the swap curves moved over a period of time, as much as it's gone up, equally more moved down. And we're only 24 hours from the budget and the rate's been moving up. In the next 48 hours, it could move the other way. So at the moment, this is all getting priced into the swap curve, and it's going to mean fixed rates are going to go up by a similar amount. So as much as we've seen 30 basis points go onto the swaps, you're likely to see that reflected in mortgage rates. This could change in the weeks and months ahead as predictions, which literally they are, turn out not to be right or turn out to be wrong by a certain amount. So like I say, at the moment, interest rates are on the rise and mortgage rates will be on the rise to follow, but it could change. That's it from me for now. Thank you.